Hello, welcome to Crux Investor. We spoke earlier today to Neil Young, who's the MD of Elixir Energy. They're chasing gas in Mongolia. And if you want our thoughts and opinions on that conversation, and indeed the company itself, you can find that at cruxinvestor.com/club. You can also get company reports on there, commentary from market experts from around the world on a variety of topics. There's training courses and summaries of other interviews that we've done. And of course, there's a huge thriving community of investors sharing their thoughts and ideas with each other. And if you go now, there's a 7-day free trial. And of course, we'd love your feedback too. So do leave your comments below and give us a like. And if you want to hear what we talked about, take a look in the description below. Neil, how are you doing, sir?
I'm very well, thank you. Pleased to be joining you for the first time.
Yeah, first time we've spoken, first time we've heard this story. I'm excited about it. So where in the world are you?
So I'm in Adelaide, Australia.
Ah, fantastic. And how is life down there?
Well, I don't want to annoy people too much, but it's actually pretty good. I mean, we've been back to the office for a number of months. We can go to the pub without closing at 10 o'clock. We can go to restaurants. And I'm even flying to Sydney tomorrow for the first time on a plane since early February. So it'll be like being a school child going on holidays again.
Oh, I bet. Well, that's fantastic. Yeah, we're going to second lockdown here, just for our sins. But you sound like you don't sound like much of a local. So where are you actually from?
So I'm from Aberdeen in Scotland originally, but I've lived in Australia for around 25 years. So certainly would consider myself a local, even though the accent still bears a vague Scottish burr.
It does rather. You got your Australian citizenship.
Many years ago, yeah.
It was a proud moment for my father. He's Irish, and he got a citizenship, and now he's a full-on Aussie. Right, well, we better get into this. We're going to hear the Elixir Energy story, but before we do, can you kick off, give us that 1-minute overview for people who have not heard the story before?
Okay, so Elixir Energy is listed on the Australian Stock Exchange. It's got a single focus. That's exploring for gas in Mongolia, just north of the border with China. And China, for those who don't know, is the world's largest importer of energy in multiple forms, including gas. So we felt it was a pretty good location to look for it.
Fantastic. Okay. There's a few outliers I want to deal with first, because again, oil and gas, even gas, has not been a very sort of sexy investment proposition for the last few years. And I think people are starting to look at it again. So what's the state of the market, and why is this a good time to be getting into gas investment?
Well, clearly the price of oil and gas, which is often linked to oil, are low just now due to COVID. And there was the expectation of bouncing back at some point. But I'd like to move from oil and emphasize gas. And for those in the UK, you'd have seen BP recently released their annual energy outlook, which is a very closely followed document in the world of energy. And BP's view, and it's by far the most bearish view on energy in the conventional oil and gas sector, was that oil demand has peaked, but the gas demand won't peak for another 15 or 20 years. And that the locale where the gas demand will be at its highest and the best growth trajectory will be in Asia generally and China specifically. Okay,
so that's interesting, because I think people haven't really paid attention to gas specifically for some time. You've decided to go and hunt gas in Mongolia. Now, we've had a few companies on, Australian companies on recently, who have tried and given up the ghost in regards to doing business in Mongolia. How long have you been operating there?
So I personally went there for the first time nearly 10 years ago. I know the country pretty well. We obtained the first license of our type in the country, which meant it took a long time of working with the government or governments there, because they've got a democracy and power changes hands frequently. So that was quite a lengthy process, but one that was very valuable in building up relationships which are enduring and actually are really benefiting us just now in this time of COVID, because we can still operate with our local team, local contractors, people that we know and trust over a considerable period. So we haven't just blown in and done a deal and then wonder how we're actually going to go and deliver on it.
Okay, so talk to us about the permitting and licensing process over there. At the moment you're doing, well, I'm reading about doing 2D. Presumably there's a lot more that you're going to need to do going forward. So what is the process? How much does it cost? How long does it take? What are the restrictions?
So the form of the license is a common one in the developing world, and that is called a production sharing contract, or a PSC. It's basically just a device that determines how taxes are paid and endures for a long time. Gas is less profitable than oil normally, so the fiscal terms are accordingly more favorable to the investor for us. We own 100% of that. We don't have any pesky partners. There is no process for a government entity to back in, as occurs in, for instance, some other countries like China or Indonesia. And so we've really got a strong degree of freedom of operation to pursue exploration in what we hope is world's best practice form, which we've taken from Australia and imparting that knowledge to Mongolia. We use local subcontractors because one of the key benefits of coal seam gas or coal bed methane, depending on what you call it, it really depends on where you are, is that it's low cost. We're not drilling wells thousands of meters deep. We're drilling wells hundreds of meters deep. That means that we can use minerals rigs rather than expensive oil rigs. Mongolia's got an extensive mineral sector, and so the capability to drill what we want to do already exists in local firms, and that is even more important in this time of COVID, where importing people is impossible, importing equipment is hard. And indeed, earlier this year, we trialled supervising a particular test in a well with some people in Brisbane who the previous year flew out to Mongolia to supervise the test, but this year managed to do it online. This was in the Gobi Desert, which will provide images of camels and dunes, but in reality, you can get Wi-Fi there, and you put a satellite dish up, you can drive there, and it's pretty good operating environment, not only for communication, but even for weather. We can operate all year round there. And then going to your question on cost, these are shallow wells, as I say. These are Mongolian subcontractors, not American ones, so they are cheaper. And what we are finding is that coal seam gas or coal bed methane is by far one of the cheapest forms of gas exploration. We can spend hundreds of thousands on a well, not millions or tens of millions on a well. And so we have a lot of bang for our buck. Investors have liked that. I mean, you mentioned that it's been a bit of an unloved sector, but we've done pretty well this year. We got whacked by COVID, as everybody did in the dull days of March. We raised money then at 2 cents, and now we're trading at 13, 14 cents. And of course, you'll always expect me to say we've got a long, long way to go over and beyond that. But we have delivered, and we can believe we can continue to do so.
Okay. You actually sort of touched upon the next question, which was why are you in Adelaide, not in Mongolia, managing this? We're saying that you're able to remotely supervise a local team that you're using there. So is that the way forward? Is that the way you're going to manage this? Or, do you actually want to be able to get back into the country? Because it's also about relationships with, with the MRPAM,
Yeah.
They need to see your face. They need to know what you're doing. You need to inform them. So what's the future look like?
I completely agree that in a normal environment, one needs to visit the ground extensively, pay respects, hear messages that you don't necessarily get in a Zoom call, and deal with people both locally in the area we operate as well as in the capital city, the regulators, as you mentioned. That's not feasible in time of COVID, but we do have an enormous bank of goodwill, relationship building with which to draw down upon. I would hope to be able to go back next year, but of course that's an unknowable at this point. Mongolia's been remarkably efficient in managing COVID. They effectively shut their borders at the end of January, and that means that there have been no community transmission incidents, no deaths, and that's a record that they want to maintain very strongly, and accordingly they will be cautious about reopening borders until there's a vaccine or similar comfort like that. But to repeat, we have proven that we can operate since February with distant supervision. Not only us, but experts that we need to bring in at particular stages of a well's testing performance, for example.
Okay. So let's get onto the asset itself that you've identified. So first of all, why Mongolia? Why not Australia?
I mean, the key thing there is that the gas of all the world's commodities is by far the hardest to move. If you're moving gold or even oil, it's fairly cheap. The percentage of the delivered price which relates to transportation is small. However, if you're shipping gas, say from Australia, which is the world's largest producer of coal seam gas, to China, as occurs in large volumes, then around half of the landed price has to pay for the cost of moving the gas there. So if you find gas in Mongolia, you are a few hundred kilometers away from China's gas infrastructure, not many, many thousands of kilometers away. You don't need to liquefy the gas through a freezing process. And so the actual, to then go to the delivered price question, you've got, say, 50 cents rather than $5 of delivery costs by having local gas. And the insight that I really had as my eureka moment as such about a decade ago was being told that Mongolia was overtaking Australia at that point as the largest exporter of coal to China at that particular point in time. And they weren't doing it by boat, they were doing it by truck. So if they're doing it by truck, it told me that, hey, they're pretty close. That being the case, they're near, they're delivering by truck, and they've got coal. And coal seam gas is naturally hosted in coal seams, which are deep below the ground. And so instance of coal, proximity, if the two can come together, we should have a pretty valuable resource, given one, on the market, and secondly, the reservoirs which should be able to deliver the gas.
Okay, so you're in the right part of the world, and you've got the licenses that you need, or the PSC that you need for now. So if I look at your PowerPoint, it's full of quite evocative language, which you've got to do at this point. You're trying to sell it, so with massive potential and enormous scope and highly successful, and you're giving the upside, the high upside of 7.6 TCF. So it all sounds fantastic, but the reality is you're just doing 2D at the moment. So what's the market got excited about?
So we commenced drilling wells around a year ago. The first ones were fairly indifferent in terms of their outcome. The well, however, that we drilled in February, called Nomgon 1, was a significant success in the technical parameters that it measured. For coal seam gas to be successful, you firstly need thick coal seams deep underneath the ground and tick. They need to host gas, which they did, tick. And they need to have a degree of permeability so the gas can move through the seams, and they did tick. We followed that well up with further appraisal wells, and the results, certainly of the first appraisal core hole, were as good, if not better. And then further appraisal, cheaper wells added to the coal volume. So what we have done to date with not a significant expenditure of dollars is de-risk that potential. Before we started, that's all it was. We thought this is a coal-bearing basin. It should host a lot of gas. But to get to that 7.6 TCF number you mentioned, our independent auditors risked that very, very highly. Now we've shown that we can do it. And as and when we go back to those auditors, they will see that the risking parameters should change, and that in the specific location of the discoveries, we have moved from theoretical resource or prospective resource to real resource, i.e. contingent resource, which is a significant path on the way to getting reserves, i.e. commercial resource.
Right, but again, there's not a lot of work done there. Not the money I get is a lot cheaper to drill there, I get that. But given the land package that you've got, you liken it to, I think, Belgium, which is a sort of nice geographic reference. But so there's a huge, big land package, multiple basins, I think you're suggesting, and you've had success after a period of not having success on the permeability front. On a couple of wells. Is that real enough to suggest that this is going to be a huge success going forward?
I think that the key to recognize in the resources sector is that small guys spend years negotiating licenses, doing initial work, coming up with success. But successful small guys don't aspire to being massive producers themselves. Our challenge is to bring in at the right time people with the balance sheet and capability and geopolitical skills who can give this license what it really deserves, who can cross Belgium and put in tens, then hundreds of millions of dollars, not the single millions of dollars that we're putting in just now. And so, as you said, our messaging is always twofold. We're a junior company. We need to tell a good story to attract interest, to create liquidity, but we don't lie when we're doing that, because our second and more important audience is our industry peers who are much larger, who will not believe hype, will look at technical reality, and will come in at the right time as a partner or ultimate resource developer and producer.
Okay, so you've got two audiences. You've got your shareholders who are obviously really, really pleased because the shares have increased significantly over the past 3 months or so. But you're saying it's about putting a dress on this and showing a bit of leg to the industry partners. How do you get that balance in terms of how you go about spending your money and what you spend your time doing, what data you're trying to create? Because you've had a little bit of excitement now, but for people coming in now, they've missed the boat, haven't they?
Well, we could believe there's considerable upside from here, and certainly the history of coal seam gas in Australia about 10 years ago, when small guys did work and big guys came in and paid a lot of money for them. And there are certainly companies bought for billions, not merely tens and hundreds of millions where we really sit just now. Our land package is bigger than probably anybody had in Queensland at that time, and we believe it's better located in terms of market, albeit Mongolia is, of course, a developing nation compared to Australia. So we think that upside is there. Having a 100% ownership position gives us enormous optionality, and that's something that we want to maintain for a period of years yet. We don't need to go and bring in a partner because we have to financially, because the expenditure is relatively minor. We do have money just now, and we also anticipate a good cash inflow to come in at the end of this year when we have some listed options which are in the money expire. And presuming that money comes in, then we will be able to maintain that independent position for a good period after that. And then each and every year we'll assess, do we now bring in a partner or do we not? But we don't have to. And we think that's a pretty good position to be in.
Yeah, for sure. So how much cash have you got today, and what are these listed options potentially worth?
So we have around 3 million in just now, and the options, if all exercised, will bring in about another 7 at year end.
Okay. And what's that allow you to do, or what's the plan with that?
So that allows us to continue exploring for at least a couple of years without needing to go to anybody else. Yeah. Right.
So, but how does it break down? I mean, are you doing more sort of 2D? Are you going to be doing 3D? How much more drilling? What are you targeting and hunting for first?
So we think 3D is really something that is for the future. It's really a development tool in coal seam gas. So we will do more 2D, and we'll do more of the various types of wells that we've been doing. So we've to date have drilled fully tested core holes and then cheaper stratigraphic holes, which are basically there to confirm coal at depths. Next year, we will follow up with a production well in the area of our existing discovery, which will look to produce gas to surface. And if the flow rates from that are above a certain point, then we'll have started to prove that there's reserves in the immediate area there. The seismic that we shot to date over 2 years has given us more exploration targets, which we will follow up this year and next. And as and when they come good, then we'll follow up with core holes and we'll follow up with production testing holes. So it's really a rinse and repeat process, starting with 2D. And also we drilled some wells even without seismic because we've got surface expressions of coal. And indeed, that's what we drilled upon in this Nongon sub-basin area successfully. So it's a mixture of tools, nothing too complex in oil and gas terms, certainly.
That's interesting. So you drilled on the basis of coal expressions at surface, and well, define successfully. When you say we drilled successfully, what does that mean to you?
So the exploration well, Nonggon 1 that I mentioned earlier, the parameters that it delivered to us when assessed against an international standard called the Petroleum Resource Management Standard, or PRMS, was deemed to be a discovery. I mean, it ticked all the necessary boxes to do that. Now, it was a localized discovery, and so the immediate contingent resource you could book from that will be bounded by the area. But what it indicates also is the risking applied to making further discoveries elsewhere in the area the size of Belgium are less than they were before we had done that.
Okay, so given that your end goal here is to find a partner, strategic partner with the right size balance sheet, and presumably either to farm out to them or to just use their money. I mean, how do you see that relationship going forward? Do you want to stay involved, or is it time to check out?
Well, I think that would really depend upon the situation at the time. I mean, I think it's often dangerous for juniors to stay in too long because they want to be producers, because they're engineers or whatever. And if they have a critical financing issue, then they can lose everything. Handing over the whole lot is probably the optimum thing to do from a risk management perspective for shareholders. But obviously we'll assess that from time to time. Interesting to draw upon the experience of our chairman. He's pretty well known in Australia. He ran a junior coal seam gas company called QGC, and it fended off a takeover from one company, Santos, I used to work for. It brought in a strategic ally called AGL. It ultimately was bought by Britain's British Gas Group. And so there was a lot of dealing with the optimum outcome at the time, rather than falling over to the first person who offered him a dance.
Right. Okay. So, given that's the end game, and you've got your $10 million, you told us how you're going to break that down. I mean, what sort of time frame are your very excited shareholders looking at for that event to happen, or for you to start thinking about something like that?
Well, I think that we would like at least another 1 or 2 years, 1 year absolute minimum of value enhancing work that we would do ourselves. In the background, obviously, we want COVID to become manageable in whatever shape or form that it does. We want to see what's happening geopolitically. China is the obvious partner for us in some shape or form, but equally it could be a multinational oil and gas company who recognized that China was it when it comes to gas markets. So, for instance, and I'm just saying this hypothetically, Shell now operates what was Richard Coddy's asset in Queensland. It exports coal seam gas to China in partnership with CNOOC. It's one of the premium operators in the world, and it might want to replicate that somewhere else, like where we are just now in Mongolia. As I say, that's only a hypothetical. We'll see what happens. But I mentioned BP earlier. All the large oil and gas companies, certainly in Europe, are rebalancing their portfolios away from oil towards gas and renewables. And that's something that clearly we are focused on in terms of gas. But also, interestingly enough, where we are is a fantastic resource for renewables as well, in terms of sun and wind.
Okay.
And ultimately, those things could also be exported in parallel to gas from where we are.
Okay, so with the relevant capex expenditure, but if I look at the size of the land package that you've got, and I'm just trying to understand the strategy and the business plan here. So I get the end game, find your partner, probably Chinese by the sounds of it. You've got to, you said earlier, show them enough data to make it interesting for them. But with the land package you've got and the money you've got available, you're not going to be able to explore. So why are you holding on to such a land package? It's a case of, never mind the quality, feel the thickness. It's huge. It's some blue sky for the next partner. In which case, what are you going to hone in on? What are you going to focus on? Just show that one of these basins has the permeability, has the volume of gas in it that you say. Is that it? Is you just got to prove it once and leave the upside for them? I mean, what's the plan?
Well, I think that the process will be replicated in quite a number of sub-basins in the overall license area, some of which will have mature characteristics of a successful production well. And then we might, for instance, put a small-scale power plant on that to run off gas and prove that its deliverability over years works. Other ones we will explore for and not find gas. Other ones we will, and then we'll rinse and repeat the delineation, appraisal, production testing, and then potentially offtake process that we're talking about. And in terms of holding onto the package, because we were the original acquirers of the PSC, we have many years to go before we need to start relinquishing anything or start to being worried about expiry. So that's, we've got at least 10 years to go before we need to start worrying about that. So we can hold on during that period.
Well, is that what that's been paid up for the next 10 years, or is there an annual contribution to that?
The nature of production sharing contract is that there's a defined period in which you explore before you find anything. Ours is 10 years, extendable for 5. And we're less than 2 years in.
But how much more do you owe? Is it an annual payment?
Okay, so we have to pay some fees each year, which aren't particularly material in oil and gas terms, but we also have to spend a minimum amount every year, which is very manageable. It's a number of millions each year. It's not tens or hundreds of millions.
Okay, in oil and gas terms, it may not be a lot, but for a company with 10 million or potentially 10 million in cash, it may be. So for what percentage or what is the dollar value of that each year?
Okay, so each year we have to pay $230,000 in fees. So even at our small market cap and cash balance, that's pretty manageable.
Okay, and tell me about this. You talked about putting a power plant on there, kind of prove things up. I mean, so is that what type of power plant? We're talking SS LNG. Are you converting into LNG, or what are you doing?
Converting into LNG is an option, and there is a large vehicle fleet in the region which ships coal, as I mentioned earlier. But probably more easily done is to build a modular gas engine-based power plant, which can start at 1 megawatt, then go to 5, go to 10, go to 50. And that sort of history has occurred a lot in Australia's coal seam gas history. We know some of the companies who did that, both as owners of the gas resource and the engineering companies who built it. In our license area, there's pre-existing electricity transmission lines. The Mongolian grid needs new power. It needs cleaner power. And so there's really quite a good fit there for that sort of development.
Okay. Just on the permeability, I mean, and I'm not quite sure who the other major players are in the region, but what are the kind of average flow rates and production rates for these basins?
So in Mongolia, we're the first one. In China, there's actually quite a large coal seam gas history, although some part of it is somewhat opaque, given just the general nature of the PRC, but also the various licenses which pertain there, some of which are higher tax or lower tax. But it's really quite a large sector. And because costs are low in China, as they are in Mongolia, the economic flow rate before something's commercial is pretty low, certainly much lower than it would be in Australia. So it might be 100,000 cubic feet per day. We believe that with the permeability we got in our last core hole, that sort of rate should easily be capable of being surpassed, although that's obviously speculative at this stage.
And what's the drop off?
So, I mean, a coal seam gas well can produce for 20 or so years. Typically, it would ramp up for, say, a year, have a plateau for, say, 3 or 4 years, and then gradually go down over the balance of 15 years.
Okay. And how much is that selling for? I'm just trying to get some numbers to do some calculations. So what's it selling for over in China?
So, I mean, gas into China has a number of different pricing systems, and they're typically opaque. The most visible ones are what is the price of landed LNG. That's linked largely to the price of oil, and at current low oil prices, that might be $6 or $7. There's also LNG spot markets, which right now are lower, but which in the past have been higher. There's gas that comes from Russia and Turkmenistan and the other stands, and those prices are confidential, but they'll be in the region of $8 or $9. And typically a longer term LNG price would be also in the region of $8 or $9. And the unit of measurement I'm talking here is like a BTU or a gigajoule or 1,000 cubic feet, which all tend to be the same.
Right. So where would you be? Look, we're way ahead of ourselves here. So you've got a lot of work to do. But again, trying to understand the potential for the market here, which is, would you be selling at wellhead or landed? In which case, what's the net back to you guys? I mean, what's the expectation on your forecasted numbers?
So I think that really depends on who owns the asset at that point. If it's an integrated China player, say a PetroChina or a CNOOC, they would do things one way. If it was a Shell, they might do it in partnership with a company like that, or they could sell ex-wellhead to a pipeline company, or they could participate in the pipeline. If we were still in, we'll be largely guarded by a larger player. But when it comes to the development stage of a large resource and it's billions of dollars, it's going to depend on the circumstances at the time.
We don't know. Okay, that's fair enough. So let's come back to your plan then. So your plan is to continue drilling, trying to get an understanding of what this current basin looks like, put some feelers out for a strategic partner with a decent sized balance sheet, and see where that conversation leads you. Between your 1 year or 2 year or 3 year timeline for that partner coming in, you're going to need to raise more capital to move this thing along. So this $10 million or potential $10 million, that's going to last you for the next 12 months or 2 years, or what's the?
I'd say more like 2 years, given the low cost nature of our operations.
Right. Okay. So there's no kind of major infrastructure that you're going to need to pay for.
If we were to go down, for instance, the power plant route, then we would see third-party capital being available for that. In countries like Mongolia, there are international financial institutions like the EBRD and the ADB who have typically funded those sorts of ventures and would see merit in, for instance, a gas plant, which would take a bit of the burden off the coal-fired fleet in the country, which is quite polluting. And so would tend to meet their mandate of greening up the energy sector.
Right. Okay. Right. So you're painting a picture, and that wouldn't affect you in the sense that you're saying you wouldn't need to dilute. That would be done with someone like an EBRD in some kind of venture, which is non-dilutory to your shareholders. Is that what you're trying to say? Yeah,
we'd like to direct our capital solely to the subsurface, and then have on-surface infrastructure owned by third parties, be they the IFIs or infrastructure owners of whatever shape or form. Okay,
so when you guys, Richard and you have a chat about this, it's all kind of plain sailing and quite easy, isn't it? There's no issues.
We're like a duck swimming on the water. It's we glide along, but there's a little bit of motor power happening underneath and dealing with issues and driving us in the right direction.
So what are those issues? What are the things what's the small fires that you're putting out each day?
Well, I tend to think that for a company like ours, there's basically three buckets of things. There's one, if you're listed, you've got to deal with your current and potential future owners frequently and all the time. You also have to conduct your operations, and we've discussed that earlier. Thirdly, you have to deal with the fact that you're in a host nation, which is not your own, and which is not an Australia or America in terms of its degree of familiarity or its maturity of institutions. So those three all I think come together as the three areas which we're furiously paddling either with or without the tide, depending on events on each particular day.
But tell me about bucket number two, because that's the one that interests me. It seems to be most fraught with risk in the sense that you don't know what's underground, like all miners. So what are the discussions between you and Richard, or you and whoever, presumably Stephen, on a technical basis? How do you go about something where you deploy your capital? What are the options and debates? I mean, that's the kind of interesting bit to shareholders, because they're like, okay, these guys are experienced. These guys have been working in country. Or, Richard's case, he knows how to build a gas company. So what are the discussions that go on between you?
So on the technical side, we start with less data than, for instance, one would have in Australia, where there's a more mature industry. But we do have data from coal mining and coal exploration activities, and that differentiates coal seam gas from conventional oil and gas, which the twain never really meet. So we do have a starting database. For instance, we have graviometry work, which BHP paid for when they were in Mongolia back in the 90s. And that's an extensive database, which we have to pay for, would be pretty expensive, but which became available to us. So we start with that. That gives us areas to target. Then we go and we do field exploration work, which, for instance, found the expressions of coal that we drilled on successfully that I mentioned earlier. We then follow on with seismic in the suggested areas from the first two activities. And then those three things added together will suggest drilling locations. Then we have the various types of drilling that I described earlier. And so what that does is build up, firstly, one, which we've got, hopefully 2, 3, 4, 5, 6, however many sub-basins will add up to a large resource. And then as and when those can be connected, they could be a sufficient resource to underwrite a significant pipeline investment. And on the journey to that, we would have the smaller scale offtakes for power gen or other local uses, as we described.
Okay. I mean, how many Australian public companies are successfully operating in Mongolia currently?
The obvious one is Rio Tinto. There are about 3 other listed companies presently on the ASX operating in Mongolia. There have been more in the past. Interestingly, in the oil and gas sector, a company called Rock Oil was in Mongolia in the 90s, and it sold out to Sinopec. LSE listed SOCO was in Mongolia, discovered oil and sold out to PetroChina. So now there's clear precedence of oil and gas companies finding things and then selling them on to substantially larger companies who can develop them. So yeah, as I said, there are a number of Australian companies, Xanadu Mines, Aspar Mining, and there are also some who are sort of following in our footsteps, should I say, but are not quite there yet in terms of various approvals they need.
Okay, so the rest of this year, more of the same. What should people be looking out for? What's the next big thing?
So we're drilling a well as we speak, and then we plan to drill another, say, 2 or 3 wells prior to the end of the year. I mean, this is drilling, as you say. The subsurface can be capricious, and not every well can be guaranteed to be a success. But I would, if 1 or 2 of them do come up with positive results, then that just is the continual build-up of successful outcomes, which goes to the process of de-risking that we discussed earlier.
And what are those thresholds? Just so I understand, I want to understand what success looks like in the future for you. So, okay, not all wells will hit. Some will be dusters or uneconomic, or they won't hit the standards that you're looking for. So, what do you think that ratio is in terms of success to failure, in terms of drill? And what are you looking for? What should we be looking for when you come out with results later this year?
I'd say a rough rule of thumb is that 1 out of 2 exploration wells will fail. Maybe 3 out of 4 appraisal wells will work, but one won't. Production testing it's not been done here before, so it's hard to put a risk onto it, but I'd say it's certainly more than 50-50 that will deliver a positive outcome. So I think those would be the rough parameters.
And how do you define technical success versus economic success?
I'd say in the cheapest exploration wells, which are just designed to measure stratigraphy, we want to find a package of coal below a certain depth and above a certain thickness. And typically that depth will be below 200 or 300 meters, and probably anything that's thicker than 10 meters is not a bad result. In the core hole wells, which measure additional parameters, we also want to measure gas content. Now, we've measured on a final basis about 9 cubic meters a ton per date. I'd say probably half that would still be economic. Then in terms of permeability, we have had some a mix of results ranging from the fantastic to the relatively poor, but even the relatively poor can be economic if combined with thick coals with reasonable gas content, because one can apply techniques such as fracking or differently drilled wells. They could be horizontal wells, which in Australia and the States, for example, do deliver economic wells from tighter formations.
Okay, and I guess given that you're kind of the first one doing this in Mongolia, you'll let us know as you progress, whether or not that will work, whether that technical solution will work or not. So, okay, you've given us some criteria by which to judge you in the future, which is fantastic. That's what we're looking for, because we're trying to sort of see if you can continue to deliver what you say you're going to deliver. So I'm excited to hear back from you later this year or beginning of next, just to see how you're getting on. Thank you very much, Neil.
I always look forward to it. Thank you.